In today's SMC Outlook, I am sharing my exact trade plan for the DXY, the euro, the pound, the dollar yen, and also gold. So if you're new here, my name is Justin Bennett, full-time trader since 2011. And as always, none of this is financial advice because it is for educational purposes only. And yes, I did change the name from Forex Forecast to SMC Outlook because I think it kind of better fits what we're doing here. And also, to be honest, I never really loved the name Forecast because I'm always telling you guys to react to markets and never forecast because that's what you should do. So the name never really sat that well with me. So I think SMC Outlook fits this a lot better. Okay, so looking at the DXY here, 4-hour time frame, let's get to this first and foremost because this is really going to drive the rest of the markets. The euro, the pound, the dollar yen to an extent, and also even gold. So looking at the 4-hour time frame, we have this low back here that we talked about last week. So this run up back here, this is important. We have to kind of map this out first to get an idea where we are currently. And what you can see back here is that if we do start to map this out, this was really the last break of structure on the upside. Okay, so this was the last bullish break of structure back here. So this right here gives us a starting point. Okay, so from here, what we can do is we can run this back and see what the last low was, or the external low within this consolidation. Okay, and one thing I want to point out too, we talked about this last week, but this high up here, okay, we never broke this high. So that's why we can't actually use this low down here because we didn't close above this high. And this isn't just the 4-hour time frame. If you go all the way down to the 15-minute time frame, we never actually closed above it over here. Okay, so we cannot use this low in terms of structure, in terms of an external low, that is. I mean, internally, yes, we can. Like this back here, you can see the weakness below here, and then we got the correction, and then the continuation. So as far as an internal low, yes. As an external low, no. So we have to use this low back here. This was all internal. And so for that, the point here is that this low down here becomes the low that buyers have to hold. Now, with that said, this is not to say that we are currently bullish because obviously over the past few weeks, we have not been. This has been a bearish trend, lower highs, lower lows. And also we have broken several internal structures here as well. Okay. So all in all, it is starting to look, pretty bearish here from the DXY. And furthermore, too, there are a few areas down here, sell side areas that could come into focus over the coming days and weeks. So in other words, these could be areas that the market may want to target. So for instance, you can see back here, 97.71, this is an open gap. So this gap right back here is unfilled. This could come into play over the coming days. Same thing back here, we have an FVG, which I don't have this labeled, but if I go to a daily time frame, you can see that back here. All right, so let me reset this. If we go back here, you can see that we do have a daily FVG back here as well. Okay, so off of this move up, you can see we didn't quite come back here and test this level. So we do have a daily FVG down here around 97.07 as well. So there are some areas, again, that the market may want to come back here and revisit over the coming days, especially given this recent bearish move. But again, structurally speaking, though, if you look at the daily 4-hour time frame, whatever it may be, this is really the last external low on this run up. So in order for this to be a true change of character, this is going to be the area down here to watch. Okay, now in terms of next week, what am I looking for here from the DXY? So for me, what I'm watching right now is obviously we have this low back here where buyers are likely to defend this region. But for me, I want to look for shorts only simply because of this bearish move that we've seen. Again, we have broken several internal structures, internal lows here over the past few weeks. And so right now for the DXY, we do have an impulsive move lower following that FOMC. But for me, and I talked about this in the FVG video, I can't look for shorts up here, okay, until we get a move into premium. Because we're talking about a downtrend, it has to be into premium, which for those who are not familiar with this, if you take your fibs here, and I have a modified fib that I've taken and actually removed all levels except for the 50. And I've also added now the 62 and 79% levels as well. And I'll talk about those in a moment. But for me, what this comes down to is I have to see a move up here into this area. Okay, so up here in this region, we have to get the move up here. Otherwise, I cannot look to short the dollar. So anything down here in red is off the table. Okay, and the reason for that is just simply the old adage of, looking to sell high and buy low, right? And so that's what I want to do here within this trend, but I can't look to short the dollar as long as we're down here in this region, down here in this discount window. So it has to be into premium for a downtrend. And speaking of these two levels here, this area, so let me move this out so you can see these numbers. So basically what this is it's called an optimal trade entry. And so OTE for short. And basically all it is just kind of a glorified way of looking at the 618, the 786 fib. I mean, that's really what we're looking at here within this pocket. But I will say, doing back testing, doing the research, I mean, it is, very accurate. And that makes sense because we know that the 618, the 786 fib do tend to capture a lot of retracements within a trending market. And so, for example, right, if you were to look back here at this last leg here before FOMC, so this last leg down, if you actually move this over here, right, going into FOMC, what you'll notice is that from this external high up here, down here to the external low, what you can see is that we came right here into this pocket, okay, before we started to rotate lower. So you can see right there that that would have been, your cue to start looking for low time frame change of character through here. And if we move back, what you'll notice too is that even going back here, so even before this, the leg before this one, if you look here from the high to the low, again, external high to external low, you can see that once again, we came right there into that pocket. And once again, over here, go back here toward this high, back here toward this low right here. You can see that once again, we came right here into this pocket before the rotation lower. So in a trending market, it can be very accurate. And again, it's just kind of a glorified way of looking at the 618 fib and the 786 fib. So that pocket there does tend to capture a lot of those reversals when you get a trending market like this. So with that in mind, if we look at the DXY here on, again, the 4-hour time frame, looking at this high back here, if we assume that this is going to be the low, and we don't know that for sure, we could come down here and test this level first. But if we assume that this low right here is going to be the low for the DXY before we get a retrace next week, then looking at this pocket up here, what you can see is that we have this range, okay, right through here. Now, if I draw just a rectangle here, just to kind of get an area of interest, right, and start to, refine this for next week, okay? So this is what I'm looking for as far as an area of interest for shorts to develop. If we go to the daily time frame, what you'll notice here is that we have a couple things. First of all, we have this daily FEG, okay? So on this candle right here, on this close, we had the confirmed FEG. Remember, it is a 3 candlestick pattern. So 1, 2, 3. Okay, so 1, 2, 3, we had the FEG up here, form right there at 98.95. Now, another thing here too is that you'll notice on the daily, we also have an order block. So from this bullish candle to this bearish one, this right here is your order block. So right up here in this region, okay? So this is where big sellers stepped in. So we have a daily FEG here. We have this order block up here as well, and an established downtrend. Furthermore, again, we have this area here. If we draw out our fibs, with that pocket there, you can see we line up right there with that daily FEG as well, okay? So for me, this is what I'm watching next week, specifically this area right through here. There is obviously the case or the scenario where we get the DXY holding above this low back here and not really giving us that confirmed change of character based on this external low and just rotating higher from here, and this becomes the bottom. And so this is where, starting next week, okay, it's important too to watch the angle of delivery or angle of attack, whatever you want to call it. So looking at the 4-hour time frame, what you can see here from these retracements into premium, okay, on the way down. So we got an impulsive move lower, we had a correction, impulsive move down, correction, impulsive correction. What you'll notice about these corrections is that they are fairly, with the exception of this one back here, they are fairly gradual, right? And so this delivery that we saw back here was, very gradual, and that's to be expected because, again, sellers were in control, okay, in this broader trend. So looking now at this low, if we were to get the market, snapping back here on Monday very aggressively, then that would be cause for a little bit of caution here with trying to look for shorts here because that would indicate that big buyers are stepping in, right? If we get a very aggressive move back, and it goes back to V bottoms. If you're familiar with the stock market, right, V bottoms are one of the first things that came about in the stock market. I mean, it's one of the first things I learned about when I was coming up, 20 years ago. So a V bottom, right, you get big buyers stepping in, and so that right there would be cause for concern. Now, if on the other hand we kind of grind back here into this area gradually, then that would be different, right? Then I'm looking for shorts up here in this region. But the angle of attack next week up here into this pocket is what's going to be key. Okay, so you also have to watch the price action here and how it develops early next week. But the bottom line is, right now we do have an established downtrend. We have some sell side areas, inefficiencies back here, that gap that could come into pressure. But for me, I need to see the DXY come back up here into this area. So even if this is going to be the bottom, right, and we're going to take out this high, I need to see this area up here. I need to see this area up here revisited regardless whether I'm looking for shorts or looking for, this to confirm as a bottom, okay? So looking at the euro next, keeping that in mind, what we just looked at on the DXY, because that's going to play into obviously the euro and the pound. So with the euro, it's a little bit different because on the 4 hour, we do have a change of character here on the 4 hour time frame where you can see that this was our external high. Okay, so external high over here, all of this was internal back here, and you can see we did have a higher low develop. So technically, right, a lot of you will be familiar with change of character plus. It's not that widely used, but it does apply in this case because we did have that higher low develop back here. But the bottom line is we had the 4 hour close above here, so that gave us that change of character. Now, just like with the DXY though, I can't buy up here because my rules say that I have to watch for a move into discount. Because we're dealing with an uptrend, it's discount and not premium. Okay, so for that, what we're looking at here is from this low down here, we know that this is our external low because this was our break of structure up here. Okay, so from that low up here to the high, assuming that this is the high, this right here is what I'm looking at next week. So I need to see the euro get below the 50. Okay, so everything up here, I cannot look to buy. So we have to move back here into this pocket. Now, if you'll notice, right, this OTE down here is right here in this unmitigated daily FEG. So if we look at the daily time frame, what you'll notice here is that on the move up, we had, as of this candle close right here, okay, so on this candle close, we had an FEG form back here, a fair value gap. And so that lines up right there in that pocket of that OTE for next week. Now, there's obviously no guarantee that we get it. There never is, but my rules are there for a reason. And if we see the euro instead just kind of go sideways here and then continue higher, right? Like for example, we have this unmitigated 4 hour FEG back here as well. So, in the event we see the euro just kind of go sideways here and not give us that pullback and just go sideways and then take off next week, then that's fine. But there's nothing for me to do because my rules are there for a reason. I can't justify buying up here just because my rules dictate that I have to wait for a move down here into discount. Okay. And again, you'll notice that in trends like this, you do get those moves into discount, right? So like, for example, back here, off of this external low back here, again, break of structure right here. We have the external low up here toward the external high, right? Notice where the euro came into this pocket, right? Right there off of that upper band of the OTE. Okay, so, similar situation over here, right? From the high up here, over here to the low. Again, we had a break of structure right through here. So off of this high, break of structure, this is our external low, external high. And if we move this over, once again, you will see where this the euro came right here into this OTE as well. Okay, so it came right here into this pocket before bouncing. So again, there's no guarantee that this does happen, but in trading markets, you see this more often than not. And again, my rule is there for a reason, just to keep me away from trying to buy high and sell low. All right, so that is my game plan. We also have I want to talk about this for a moment because we do have a December VAH here as well. So VAH stands for value area high. Now, this is kind of getting into the realm of TPO or auction theory, which I will make videos on in the future because I also use this as well. But basically this right here, if we go to a monthly, this is a paid indicator through TradingView as well. There are other platforms out there that offer it, but I really like this one here from TradingView. So what this shows you, market profile is basically, I'm not going to get too far into this here, but every block here that you see, all these little blocks show you how long a market spent in that time within this window. So here we're looking at December. And so what this tells you is that the euro has spent the most time right here at this level in December. Now, if you look up here, this VAH, this value area high and this value area low, what this is telling you is that the euro has spent 70% of its time trading between here in December. Now, these levels tend to serve as support and resistance once you get a move beyond them on the high time frames. So we also have, and this is ongoing, it will change, but we have the December value area high right here as well. Okay, so we have an unmitigated daily FEG. We have the VAH up here. That gives me, again, this area of interest down here in this region. Okay, so hopefully that didn't confuse any of you guys, but that is something I'm paying attention to here as well on the euro, just because, again, we have that pocket down here. I'm not trying to pinpoint an exact level because really what it comes down to is if we see the euro get down here next week, right, I drop down to a lower time frame and then I'm looking for a change of character down here in this pocket. So it's not just a matter of, do I buy here or do I buy here? I'm not trying to buy at a specific level. I'm not trying to pinpoint the exact bottom. All I'm doing is developing an area of interest to watch for that change of character next week. So looking at the pound, this is interesting because last week, I actually make a weekly video for VIP members on Wednesdays. And what I told them there, and I've talked about this before on YouTube as well, but this level up here at 1.3434 on the pound, this is interesting because it is a 7-month composite point of control, also the range midpoint. So essentially what that means is that this range that we saw back here, this is the midpoint, and it's also a 7-month composite point of control. So what does that mean? It means that over 7 months, going all the way back here, over these 7 months, this is where the pound spent the most time. And so this was going to be a significant test for this market. And you can see where if we drop down to a 4-hour time frame, the pound actually spiked above this by about 5 pips before reversing. So, clearly a level of interest here for sellers. Now, at the moment, the trend is still intact. Okay, the uptrend is intact. The one question I have, and this is going to be very interesting going into next week, because the structure here on GBPUSD is very different from the euro. And what I mean by that is, if you look here, we're already coming back into these highs, okay, this consolidation. And if you'll notice on the euro, we are not there yet. We're not even close, okay? So if we look here at the hourly, right, these are those highs back here, and we're nowhere close to this. So my point here is that knowing that the pound and the euro tend to move together, my point here is, if we see the euro drop all the way back down here in this area next week, what does that mean for the pound? Where is the pound trading at that time? Because right now, this up here, okay, if we mark this out, this is our breakup structure right here. And that makes this down here the external low that has to hold. So if the euro drops that low, there's a good chance that the pound could be down here or even below here. And if the pound is below here, knowing that they move together, right, do I want to go out and buy the euro if we're down here in this pocket that I just talked about? And the answer is no, probably not, because what could be happening is the pound could be signaling what's ahead for the euro. And it happens more often than you think, where these markets do kind of front run each other. And you can actually get some pretty good cues off of just watching other markets that may be front running others. So I don't want to get too far into that there, but that's what I'm looking at next week. If we do get the euro dropping all the way down here, where is the pound at that time? Because just to kind of show you quickly, a lot of people kind of disagree. Oh, well, they don't move that similar. They're not the same chart, et cetera, et cetera. But for all intents and purposes, I mean, they're pretty much the same, guys. You look at this on the 4-hour time frame. I mean, this is going back to November. They pretty much move together, right? So again, if the pound is doing something here that I don't like in terms of, dropping below this external low down here, then that could change things for the euro as well. So these things are dynamic, guys. Don't just listen to what I'm saying here in this video. Watch what happens next week and then be dynamic with the market and change with the market if it warrants it. Okay, so really though, this is a breakup structure here, guys. So this is going to be the low down here to hold for the pound. Now we have this area back here. This is an unmitigated 4-hour FEG down here as well, right here below this low. So this could be it. And again, there's nothing saying that the euro is going to drop down here into this region, right? There's nothing saying that. This could be the bottom for all we know. So I'm not trying to say that I'm bearish on this market by any means, because again, we have to go with the trend. And right now the trend is intact, okay? So we have the breakup structure over here, right? This was our breakup structure. This down here, unmitigated 4-hour FEG. We also have some pockets down here as well on the lower time frames that could come into play, but this down here, this low down here is really the one that has to hold going into next week. Okay, because if it doesn't, then obviously we have a change of character to where this trend starts to weaken, and we could be looking at a push down there towards some of those sell side inefficiencies. Okay, which there are some down there to target if it were to happen. Okay, looking at the dollar yen here, let's go on to this one. And again, this is one of the benefits of being in the VIP group, because I called out this area down here as an area of interest this week, and we got a really nice bounce from that. And just to show proof, because I know how this stuff goes, if we look here in Discord, this is where I post all of my ideas for the week. And this was the announcement that I made, beforehand, all of the factors that were going into this from the dollar yen. We did have a daily order block. We had several factors, 4-hour FEG, 4-hour bullish, change of character, etc. Going into this area. And you can see right down there around 155. And sure enough, we did get the move. If we look at the daily time frame, this is the area I pointed out right down here for the dollar yen. Okay, and we got the nice bounce there. However, one thing to point out is that so far we really have just internal price action here on Friday. So, right here, this high up here, this is all just internal now, right? Internal. So one thing that tipped me off to this, that I was looking at a buy down here, was the fact that if you look, first of all, in the 4-hour time frame, we have an uptrend, right? An established uptrend. And you can see over here too that we do have, this was actually a breakup structure back here. Okay, so we closed below this low right here. So because we closed below this, even on the 4-hour, it meant that we could use this high up here as an external high. because we can use that as an external high, we did get that change of character, right? We got the close above. So that meant that I was looking for buys. Now, where was I looking for buys? You can see we have things like this back here, right? This fair value gap. We had that daily order block down here. And again, that played out really nicely. Okay, so going into next week, we do have some sell side inefficiencies down here. You can see that even stuff like this, we do have pockets like this down here that could come into play, even, the lower portion of this wick on the 4-hour potentially. So there is that chance that we do get the market pushing back here into this area before we get a bounce. But one thing too that I want to point out, even on the 15-minute time frame, you've got to be a little bit careful now because, as I said, all of this is internal. And what I mean by that is that, yes, this down here was an area of interest on the high time frames for a reaction, which we clearly saw. But if you look here at this structure on the way down, right, this is your structure now, meaning that this is your external high on even the 15-minute time frame. And we're still below this. Okay, so we haven't really changed anything here within this current leg. Okay, and that's important to understand because if you're trying to go out there and buy this thinking that, we've changed this structure, we haven't. Okay, so this is the high up here that buyers have to take out. And again, you can see this right here. This is kind of that void that I was talking about where we have this inefficient auction down here from the dollar yen where the market may want to come back there and rebalance that region down there between really 155.3 and 155.5. Okay, so that'll be something to watch next week. But again, as far as a change of character here on this leg lower, we haven't had it yet because this is the high to watch. Okay, so hopefully that's clear enough, but we do have an uptrend here. And this is another thing too. This is another factor that I talk about this a lot where, people will say, well, why do you even compare the dollar yen to the DXY? Because the yen is such a low percentage of weighting in the DXY. And that is true. However, if you look at the DXY and literally just compare them, right? And this is always going to trump looking at kind of weightings and everything else. I mean, they're pretty much, they move the same, guys. I mean, yes, there are variances here, more so than the euro or even the pound. But for the most part, it is pretty much the same, right? And so this is why I'm saying too, that it depends on what the DXY does. And that's going to kind of drive the dollar yen as well. Even though the yen is a lower weighting in the DXY index, the DXY is going to matter if you're trading the dollar yen, bottom line. Okay, so if you're bearish on the DXY or you see something there that is looking bearish, then do you want to go out and just blindly pile into the dollar yen into a long position? Probably not, because again, the DXY is going to drive the dollar yen to a degree. So let's get into gold here, finishing up with XAUUSD, which we're seeing a pretty big reversal here since I started filming this. And this right here, okay, so what I'm looking at now on the 4-hour time frame, this is what I'm looking for going into next week. And actually, before I do that, let me recap what I was looking for the past 2 weeks, which did not materialize, unfortunately. But you can see that right back here, okay, so we have two breakup structures right here. Okay, so buyers are clearly in control right now, right, with the market just taking out these highs. What I was looking for over here during this consolidation is I wanted to see a pullback down here into this area of interest because there was a void down here in this region, plus we have this single print down here. There's a weekly FEG that's unmitigated, daily a bullish FEG that's unmitigated. There's a lot going on down here, single print down here in this region where I was looking for a push down here first, and we did not get it. Okay, and that's just kind of the way it goes sometimes, but just to kind of go back to our OTE for a second, and just to kind of illustrate why areas of discount matter when you're looking to buy in uptrends, is if you look back here, right, so external low down here to external high, you can see that we came right here into this pocket before bouncing. So once again, right there into that pocket, into discount, into that OTE. And then over here, if we look from, again, external low, we know that this is the external low following this break over here. So breakup structure right here. As soon as we get this, we know that this down here is our external low. So what we can do then is we take the same thing, our fibs down here from the low up here to this high. And you can see where this region was right down here, right around that single print. So this single print right here, this inefficiency, we had the OTE right below that. So I was basically looking for a move down here in this region, followed by a change of character to get long. And then my target from there was going to be exactly what gold is doing here today, right? These inefficiencies, these two single prints up here, those were going to be my targets. Of course, we went the other way. We just went sideways here, never really got the pullback, and moved up here toward this area, okay? But my rules are there for a reason. Again, this isn't enough for me to just sit here and say, well, it didn't happen this one time, so let me abandon my rules, because I know over time, my rules are there for a reason, and they are going to give me an edge. So looking now at gold, right, still clearly an uptrend on the 4-hour time frame. Because we now have a breakup structure over here, okay, so a new breakup structure right here, we can look at these lows right back here as our external lows. So external lows, external high. And that's just because we do have a decent size pullback here on Friday. So looking now, we can do the exact same thing, right? It's just the same thing over and over again. Looking here at the lows up here to the high, we can map this out and say that, okay, we know that our 50% is right through here. This also means that we cannot think, or I cannot think about buying up here. I don't want to say you, because obviously I can't control what you guys do. I'm not here to tell you what to do. This is just, my opinion. This is just what I do. But anything below here is fair game, okay? So that is the very first thing. I cannot do anything up here in terms of buying. Now, the OTE here, okay, is right in this region down here. So if we map this out, let's go ahead and draw a rectangle down here just to get an idea of where this sits. Okay, so right down here in this region. Now, if we remove this, just to kind of keep it clean, what do we see down here in this area? Okay, so if we go to something like a daily time frame, right? I mean, unless barring something catastrophic, right? As long as we close this current candle, above this high, which, I mean, again, barring anything catastrophic here in the next few hours, if we close above this high back here, then this is now a daily unmitigated fair value gap. So I would like to see this down here for next week, right? A move down here into this pocket to fill this area. And that's the only way I can look for buys here into areas like this back here, which, by the way, this was a 4-hour FEG up here as well, which it looks like we either tagged that or came very close to it. I mean, very close to it there on that last move. But this is the area down here now to watch. I'm going to get rid of these now just because we have seen those satisfied. So for me, next week, if I'm looking for buys here, this is going to be the region. I know we have a daily FEG back there that could be forming. We also have this area that's OTE down here as well. And I haven't done this yet, but I'm going to pull up TPO here, and it could backfire because I don't know what it looks like here on the daily. But one thing though that you can do as well, and you can change this to weekly and monthly, and that's kind of the nice thing, is you can see where this market has spent the most time over the past, day, week, month, and you can also merge these as well. So you can take this and you can merge it with the previous one when you get sideways action like this. So I know that this also is a 2-week composite POC through here as well. So I'm just going to change this to a key level so we know. All right, so let's remove this here for a second. Go back here to the daily and mark out this FEG as well. Okay, so off of this high, we have this FEG. I'm going to mark this as a FEG, and I believe I have a POC template as well. Yep. So right there. So this is now going to be, I know that this is within that OTE, right? I know that this is in discount, so I can remove this. This is really going to be my area of interest for gold next week. So if I'm looking for buys here, this is really kind of what I have to see. I'm going to drag this over just so I know that this is 2 weeks worth of a point of control. So basically, bottom line, this level right here shows me that this is where gold spent the most time within this consolidation. So it's going to be a factor. I also know that this is a daily FEG. It's an inefficiency. So the market's probably going to want to come back here and rebalance this area, right? Look at this void back here. So if we get that and the trend stays healthy, then I'm looking for a change of character down here in this region next week, potentially for the pushback here into these highs. Okay, so if you look back here, if we go to a 4-hour time frame, just to fit all this on the screen, you can see that these highs back here, essentially a double top. This is one of the rare cases where a double top with a neckline actually worked out and played out well. But you can see the highs up here, right? These are equal highs. So this would be my target up here. Obviously, first target this high, second target up here in this region, these highs back here. So looking for the buy down here, looking for that change of character for the push up here into those highs next week. Now, obviously, if things were to change, if the DXY strengthens, if we get the DXY showing signs of a bottom, then that could change things for gold, because the dollar does tend to move inversely to gold. And so you've got to be aware of that as well. But bottom line, just keeping things simple. This right here, area of interest for next week for gold, right there between 42.09 and 42.38 or so for, the potential change of character down here in this region to target those highs. Now, in this case too, this is going to be the low back here that has to hold. So this low right down here. So if we were to see gold start to move below this area of interest and start to look aggressively bearish toward this low, then that could be problematic and start to develop a change of character here within this internal structure, within this range, okay? But for now, bullish, right? Break of structure, buyers are in control, higher highs, higher lows. So I'm looking for buys down here, but I need to see that move down there into discount, specifically 42.09, 42.38. All right, so hope this video helped, guys. As always, this is not financial advice, but if it did help you, be sure to subscribe to the channel. Have a wonderful weekend, and I will see you again next week.